I'm going to explain to you exactly how I use the 90 MA and supply and demand every single day to make money here in the market. I'm also going to go over key levels and how you need to be using these to trade equity, stocks, forex, or anything in between. Let's get to it. The first thing that we're going to look at is going to be demand and key levels, or supply and demand, whatever you want to call it. Now, there's a difference. When we look at key levels, obviously here, there's no supply or demand focused here, but so we're wicking, and it's basically the highs that we've established before we flip them, and ultimately it's like an SR flip, but that's a key level, right? So a demand is when you break out or wherever you're at and you start to establish there as well, consolidating in the area, proving that there's buyers showing up there, holding you there, and eventually pushing you up. And then you can see here on like the 4-hour chart how you wick back down, buyers establish and push you back up again and again to ultimately make another high. If you want to see that complete video, and this is just a rough drawing of what's happening here, the supply and demand video is on this channel. You can go check it out. I have 2 on that specific topic. Now, before we jump right into that, I do want to say we're going to be using supply and demand and kind of key levels. Now, primarily I'm using supply and demand when it goes to looking at more of indexes, but I do have them for bigger names like Tesla, Nvidia. You'll have major levels you're watching, but really you're watching those on indexes, and they're more of key levels that are tried and true on equities, specifically something like Tesla, Nvidia, Apple, AMD. These are things you're going to see me mention in all of my videos on my secondary, or actually my main channel. And if you want to see that main channel, what I'm doing every single day, the link is down below somewhere down there. So just scroll. Also on Twitter, you're seeing me post about these all the time. So if you see me changing my term between supply and demand and key levels, just know that's what I mean. Let's jump into it. But you're going to see time and time again, hey, come into demand and buyers step in and in and in and in over and over and over until eventually this level gets invalidated. Once you come through it, it's invalidated, right? So the important thing to also know is demands and supplies get invalidated, key levels remain true. They will stay there forever. They will always be a point of relevance. Okay, so that's the important part to understand. When we go into something like equities, right? And for the sake of this video, I want to talk about Meta. I always like to use examples from things that we've gone over either on Twitter or on YouTube in general, right? Because I like to give examples of how we found this trade and what we were looking for and exactly why. So when we look at Twitter, what we were looking at, and by the way, the Twitter link is down below, what we were looking for, the 304 level here, we had our basically 298, and then we head down to around 289. But I said here, what I've been doing and looking for, just scalping 304 rejections until we catch the breakdown if it comes. But as we see here with the key level, and I'll explain exactly what we were looking for. So if we go back into basically time and we look at how we were established here, you can see time and time again, we came before we even made these new local highs, we were rejecting off of 304 continually in 298. So 298 until eventually we flipped above to got to this 304 level. Now, once we got to the 304 level, you see we broke through, but ultimately if we break it down to like a 2-hour time frame, as you can see here, again, this white line, you can see that we flip 304 and this becomes a level of support, right? So we're establishing it once, twice, you consolidate here and then ultimately reject, you get back over. We bounce continually. You're seeing this level. Obvious relevance happening here. And if you look at time and sales as well, there were a lot of buyers at this time, but again, can't go back and cite that information. And then we also know going down to 298 was another level right there as well, clearly being established. These are not supply or demand levels, just key levels where you can see buyers and sellers continue to show up. It's going to be different for every single stock, but again, you're going to notice how they get established time and time again. And a reminder, you want to work from a top-down approach, the weekly, daily, 4-hour, 2-hour, 1-hour, whatever you're doing. 4-hour is where I find the easiest way to kind of quickly establish these. I will fluctuate between, going lower if I have to. So that's where we're at. Now going into the 289 level, again, we can see the 2-hour just gives us more relevance. So you can see how many times we tested this area. Before we hit the massive breakout, the ascending triangle, touching the 289 level over and over and over. We broke above into 298. Guess what happens? We retest 289 multiple times before eventually breaking up to the upside, retesting 289 again. And you can see all these attempts. Now, then we go back to where we're at now, right? So ultimately to the day and age and kind of where we're trading on this, to where we mentioned this on August 15th at the 304, 302 level there. So we can see we kind of are establishing, trending. We get a little bit of breakout up. We get rejected back on 304, the shorts back on, and you move into 298. break through 298, you flip, reject again, you push into the next level, 289, and then ultimately into the bottom level of 277, which you can also go back and see. This was that breakout point once again there when we broke out of this little ascending triangle as well. And you're going to notice when you're trending, a lot of the same patterns tend to happen, whether it be bull flags, ascending triangles, whatever it may be. And so you're always going to be looking for these types of patterns. I'm going to show you where the 90 EMA comes in here. But again, you have to be able to understand and comprehend how you're finding these levels and exactly why. Again, there's videos on this channel explaining how and why, but quickly you can see mainly what you're looking for to help you out here is going to be finding previous highs and previous lows. So your previous high here, quickly you can see 289. Right? You break above, then it's 298. And you can see how you're just stair stepping, and stocks typically do this, right? We overcomplicate things, especially when we're looking at equities, okay? And that's the importance of what to know here, right? So you don't necessarily need to go all the way down to the wick, but you need to understand that median level where it's coming in. Because if I go all the way down to the wick, then I'm going to miss that support, or 275 right here. Whereas you could have got into another long opportunity when you came into 277 two times and made money even back to the upside. So again, as a scalper or a day trader, you need to understand these levels to put yourself in the best position to win. And it oftentimes tells you if you're trying to, let's say, go short and you're at support, you don't want to go short when you're at a support because that's the least likely chance of you going to win. Okay, so I've made a 90 EMA video. You've probably watched it. I'll have another one coming up pretty soon, but I think it's important to understand how we're implementing the 90 EMA in everything that we're doing. It's not just giving us an entry signal. That's not really what the 90 EMA is for. It's more telling us when to get out of the trade or when a trade might be finding a bottom or there's a pivot point coming. So we know to start scaling out of that trade, or it might be time to just cut the trade as a whole. But remember, at the end of the day, it doesn't come down to just one indicator when we're entering a trade. It's a handful of things, and it's everything that's kind of making the trade more profitable and giving us the best chance of success. We don't just want one thing to go right. We want multiple. So again, it increases the chances of success. Okay, again, so if you have not watched the 90 EMA video, I recommend doing so. Again, it's on the channel. I always am watching the 90 EMA, especially for intraday trading on the 5-minute time frame. It's your best friend. When you get some quick volatile moves on names like Nvidia and Tesla, or maybe even SPY or Qs, you can go to the 1 minute, but it's most reliable for trending throughout the day on the 5. Now, what we were looking at, remember I said August 15th, well, we moved into August 16th the next day after, just so you know. So it took a day after you broke back down, and then you get a bear flag into that, 298 level, right? So you've already broken down from the 304, which we were watching, clearly breaking down, pushing down below, right? And so just so you know, when you look at these levels, you can see as you start to break down where you get confirmation of what's happening from these overall levels. We're going to quickly just grab the channel tool so you can see a little bit more clear right there. But what you're going to be able to see is you're not getting holds necessarily above that level. So when we start to break out from this point, you can see right here, as we turn it right here, as you can see, you're holding below the 90 EMA. So once you start breaking down, you're rejecting. Let's say you enter at 304 roughly, you get below and you're able to hold trend ultimately down to 302. And you wouldn't have had a signal necessarily to be concerned about this until you get back above 302.5. That's where you're at there. But this is a good example because some days you're going to get choppier behavior. And the 90 EMA always isn't going to be there to save you, which right here, my rule of thumb is I want 2 candles above before I get concerned above the 90 EMA, right? So we look and you're getting 2 candles here. But sometimes you need to be using the VWAP also. And I have both of these videos on there. And this is a great for instance here because right here you start mounting above, but you're still below a bullish trend or any bullish behavior because you're below the VWAP, which is an awesome tool. And you can see we get held up here. We can't even get above 303. And then we just push right back down below the 90 EMA, signaling again, you're back in the trend, and you push down into roughly 300 before you find some support. And then eventually the next day we hit that next target of 298 right off the bat. You can see that we're holding below not only the 90 EMA on most of these pushes, but you're also seeing that we're holding below VWAP the entire day. So again, the 90 EMA, we love to use it to spot the trend of what's happening, especially with aggression. As we can see coming in the next day, as we gap down, we kind of trend sideways. We get it even above VWAP. So again, this is a point of concern for me, right, as the day's progressing. But then what happens here? We get below the 90 EMA and the VWAP. In my opinion, signaling you got a lot of weakness here, and it might be time to jump onto the trade, as you can see there. right? We see that right about here. This is something that I'm always watching for. And then you trend violently from 299 down to roughly 295.7 before you double bottom on the day and get a little bit of upside back into resistance, right? And so what happens, again, this is that key level of 298. We break down. And what do we always expect? A retest. And this would have been our time to possibly get into some short positions, right? And so what we see here is you can't even get a hold above that key level on a 5-minute time frame, and then you push right back down. So again, when we're looking to get into entry opportunities, sometimes we're not going to have always the best signal from the 90 MA. There's going to be times, especially when your stock is fighting against indexes, that you might have to maintain and watch these key levels. And that's why I always say you can't just focus on the 90 MA, focus on VWAP. You got to have a full-on strategy and game plan. Okay. And so those are things that I'm looking for. Now, if we would have held above 298 for, 3 candles here on the 5, I would have got concerned. But ultimately you get shot right back down. And then where does it go to? Right towards our next level, 290, 289 roughly. And then eventually what happens again on the next one, you start flagging once again for one of our favorite patterns, as you can see right here. Again, just giving you a rough visual of what's happening. And then you get below the 90 MA and the VWAP once again, like we mentioned over here. Again, very important when you see this type of action. It's definitely one of those things to be looking for when you're breaking out also of a bear flag on top of it, below the 90 MA and the VWAP. And then boom, 293. Roughly, you don't even get back above it until 285. And then you have the next day, obviously, which you gap down again, and then you get back above. And you're doing a very similar structure, moving back into support. But look how you move here. You're just grinding all day above the 90 MA, giving you no signal that there's any weakness, and buyers are having control of this, and you're just fighting above the VWAP. And so you're able to just establish this trend and structure, and it really plays out perfectly because you're able to zoom out, and I encourage you guys to do this for yourself, and look at all these levels playing out. Look at how you're reacting to the key levels, 289, back to 298, 297, back to 298, trying to find support and buyers there, and ultimately pushing back down to 277, back up again, probably going to hit 289. So again, it's very predictable behavior that we see here, and it's all tradable based on using the 90 MA, VWAP, and supply and demand and these key levels. And so again, I also want to make this very clear and very clear in the second part of the video as well, of we're only trading based on the trend as well of indexes, which I'll tell you more about here in a second. Now, number 3, this is probably one of the hardest parts to come to terms with, but it's knowing when to scrap the trade or knowing when the trade is over. And again, I want to make this pretty clear because a lot of people like to stay in trades too long, or then they're just like, well, do I hold? You should never be asking the question, do you hold? You should have a clear cut plan day and night when it comes to a trade. It hits that point, you know, it's time to get out. It's time to bail. You're not a hindsight millionaire. Okay. That's not the name of the game. We're not talking about make believe money here. Okay. This is our real livelihood, and I'm trying to respect it on both ends. So you know exactly where I'm coming from. Let's break that down. So what we're looking for primarily for a reason to get out of a trade, for me, typically it comes down to indexes pointing me in a different direction on the market. So if I start to see support, for instance here, on the end of day Friday, something I noticed is we had our Jackson Hole meeting, obviously a very important Fed day. So let's say you're looking at PCE, CPI, PPI, doesn't matter, Fed minutes, right? So the week before we saw some very interesting action, right? So on Thursday we sold off, Friday we got bought back up, and then ultimately kind of the same thing to, in the next week, right? And we're just bouncing off of previous kind of supports that we established here. And you could argue that you kind of made a little bit of a demand here, right? On smaller time frames. And then you are bouncing out of this once again. So once I see us getting reactions like this on indexes, the S&P 500, I become less likely to want to short, even if my name or even if my stock looks good, right? And this is a hard part for people to wrap their head around, right? So you can see strong selling into this level, and then obviously we're bouncing. Great reaction from buyers here on the 2-hour time frame. Multiple days of buying happening here, right? Great reaction getting out of this. So even though Meta, again, great downside push. But once that happens, it's time to flip the script here. It's time for me to say, okay, Meta, yeah, you had some downside into the beginning of the day, but I'm not going to try to break down this support. I need to quickly realize either one, I need to start getting out of my position because its underlying index, the S&P 500, is getting some strength and momentum. And as you can see, it started playing out to the upside, right? hindsight looking at this. But ultimately, if I want to start going more in the bullish sense. So once you get above VWAP, that's when things kind of turn for you to where you can say, okay, I want to start trading this thing to the upside, right? Because not only am I getting a break back above what's happening here on the VWAP, but I'm also seeing it happening here on ES. So I can be net bearish on something like Meta, but once those indexes give me a sign that things are changing or buyers are showing up on the broad market, it's time for me to reevaluate where we're at ultimately. And that's what we have to start to establish. And you could potentially start seeing a double bottom playing out here if you start to break back above 299, 300. And then it's really go time for bulls to step back in. And this is how I'm pivoting all day looking at stocks and equities throughout the market. If you have questions, comment down below. I'll see you next time.